Everybody has their own methodology, and I want to tease out one of the points you made. This question of investor market fit, right? You said it's not really about investor market fit, but it's really about investor characteristic fit. Each investor has a unique way, a unique algorithm in their head of making a decision, the intuition of making that decision. And you can use numbers and math and science, but fundamentally it comes down to a qualitative assessment of the things that you care about based on all the pattern recognition that you've duly earned over years and years of successes, but also mostly failures. Hey, everyone. Welcome back to the Ignite podcast. Today, we're delighted to have Timothy Chen on the program. He's the general partner at Essence Venture Capital, a firm that focuses on dev tools and data infrastructure at the early stage. Pretty exciting. Timothy also has a rich background as a founder, engineer, investor. We also both worked at Microsoft. Before starting Essence, he co-founded HyperPilot, which was acquired by Cloudera. Congratulations. And he also led engineering teams at companies like Mesosphere and Cloudera, obviously. He's been an active member of the Apache Software Foundation. He's advised numerous startups in scaling their engineering teams and products. Expertise in open source technology, a big reason we wanted to have him on the show. He's built a reputation. He's on Fund 4. And yeah, we're just excited to talk to him. Thanks for coming on the show, Timothy.
Yeah, thank you. So
let's start at the earliest. Let's just take this chronologically. Like, how did you get into tech?
Wow, that's way back. Like any engineer, usually you're influenced like your childhood, right? So I don't think mine says anything unique or special. My dad bought one of those early IBM something computer that has just plain terminal. And I think I have a cousin that was really into computer science back in the day. So I will be like bugging him and learning like basics, learning how to do very simple languages and stuff like that. So I got into tech really purely interested because I was just liking computers and stuff like that, playing video games, hacking a Visual Basic back in the day and basics and stuff like that. And just along the way.
What was your go-to video game back in the day?
Man, this is a long time ago. I mean, my dad bought those original Nintendos, right?
Yeah.
So like the
Nintendo,
Brothers, right? All the like Metronome, all that kind of stuff. And then the computer side, you got the Ninja Turtles and all these kind of stuff we played with. And I kind of grew up maybe in my middle school, high school. I was into like shooter games, FPS games, like Counter Strikes, Rainbow Six, and that's kind of things. Halo as well.
Still around.
Yeah, it was still
amazing.
around.
Yeah,
and that's kind of what I even took a bit more seriously. I was competing in. I'm never really that great, but we're playing in tournaments and stuff like that.
Oh wow!
And that was I guess that's my childhood. Is like learning how to play games in a team setting, which I don't know. I just found it to be really fun.
It's such I've written some articles on this too. I think I'm a big gamer and I still game almost every day. I was pretty proud to learn that a lot of famous VCs and entrepreneurs game and they still game.
Yeah.
Like I think Zuck was bragging that he's probably grandmaster status at Civilization.
Oh yes.
The 4X game where you kind of build your civilization.
Was that Elon been tweeting his Diablo 4?
I think he played.
Yeah.
Yeah, he played Elden Ring like all night when he was acquiring Twitter.
Yeah, it was crazy. Yeah. I mean, games are amazing. To me, I used to play games really just for the sort of the kick out of it, right? Like the feeling you're getting better at something. And I was known to be the guy in the friends group that knows how to play games the best, right? So you kind of even build identity around it early days. Yeah.
Oh, me too. Like I could take anybody best out of 5 at most games growing up. Like I played like an enormous amount of video games. Like
yeah. So that's
to the point it was kind of probably harmful to my health.
Anyway, part of getting into tech, it was just like the video game side, leading into learning about technology. And I was in Taiwan back then.
Oh.
I was born in the US, but I went back to Taiwan when I was 4 years old and came back when I was 16. And so when I'm 16 years old, came back, I still playing Counter-Strike and stuff like that. But went to University of Washington, got my degree into like informatics and.
Oh wow! What year was UW?
2003 to 8.
Okay, so we just missed each other. I graduated in 2003 from UW.
Nice. Yeah.
I didn't know we had that connection either. So there you go.
Yeah, it was fun times. It was early days. And this major I went to called informatics, nobody even heard of it because a brand new major that just started. That's how I got into like programming and stuff like that. But that's my tech career has been more like learning on my own because I wasn't in a CS program. My GPA wasn't good enough to get into computer science back in UW days. So I had to learn myself, and open source software was the way I was learning, actually doing something interesting because, I couldn't get the job opportunity to code anything interesting. So
That's amazing.
kind
So
of how
you entered in a recession and then you graduated in another one. 2008.
kind of, yeah. So I was an intern at Microsoft. I had to do a bunch of interns and volunteer stuff to finally get to a point where I could intern at Microsoft.
Yeah.
And when I was interning at Microsoft, they got me a full-time job. But when you're intern at these large companies, you don't get to choose at all where you're gonna go. So I think because I'm a non-CS major, I got assigned to the MSIT side, which is like the IT part of Microsoft initially, which is really, really don't want to be at. It was boring as hell, like.
Yeah, that's where you kind of put the people that aren't good enough to code. It's like, all right, here, do the IT stuff.
Yeah, and it's so depressing to a point where like, if you ask around anywhere, like they've been working for 30 years, 25 years, like I actually eventually want to go do something more interesting.
Yeah, like look at the overweight guys eating donuts, and I'm just like, am I going to end up like these guys 20 years from now? This does not look like a good life.
I mean, they are enjoying themselves, but just like from a technology point of view, what they actually work on, it's just so boring. And so
it's basically like glorified tech support, right? I mean, it's
kind of like we're building stuff, but we're building internal systems, like release management tools, like HR tools.
Oh yeah.
So we're still doing stuff, but like it's like 30% ASP.NET's kind of maintaining stuff, 30% XML editing kind of things. Like you're never really building anything interesting. So I took to open source back then even more. I was like using open source as a way to actually learn and actually build some interesting things to get ready to actually go apply more interesting jobs. But
what that first open source project was, where you're like, oh, this is awesome, and you're submitting pull requests and
small patches. But so I never really worked a lot back in the Microsoft days. I was just like, I want to play a little bit each one. I remember I was doing Ubuntu. Was doing like LXC kind of things, like container type stuff back in the day. I was really intrigued by languages, so I worked on Iron Ruby. Iron whatever Python. Iron means this .NET version of a dynamic language, right? So I submitted patches to some of the parsing rules, some of the testing side. I did an open source game engine for fixing some multiplayer bugs they had and stuff like that too. So anyway, I never really done a lot of work, but just enough work to kind of like learn how things work, and I was learning C++ as well, so kind of using it as an opportunity to do that. And so these are like small things I did, a couple of patches here and there, a lot of book reading, a lot of like that kind of stuff. Yeah,
that's amazing. And then so you're building some internal tools at Microsoft. What happened next?
I try to transfer to other Microsoft places, and MSIT, you're good luck going anywhere. And a recession happened. Microsoft laid off like 80 to 90,000 people, 9,000, 8,000 people, right?
Wow, really? 80, 90,000 people?
No, 8,000, 9,000 people.
It's 8 or 9,000.
Yeah. Back in that was like the recession times, right?
Yeah.
So that's like 2009, 2010, I think. So almost no job opening, like pretty much none. So I was stuck. I was really stuck. My job was so boring. I didn't get promoted. Because I came into Microsoft. If you're coming from Microsoft college grad at 59 level, but because I'm SIT got a 58, so I can't even do a literal transfer anywhere. I was basically just stuck. I had to take a chance. Somebody had to take a chance on me, and no one truly did at Microsoft. So I was basically had to interview outside, and I think luckily was able to get to a startup that wants to hire me.
That's so funny. I have the exact same parallel story every time I switch careers from sales to demand gen, from demand gen to product. It was the same thing. Like just kind of stuck, can't transfer internally. They're not valuing my skills. Let me search around for a startup who will take a chance on me. Tell us about like that process.
Back in the day when you were like, I was like, what, 24, 25? When you just joined Microsoft and everybody around you, it's like, plan to stay there for life almost, right? That was kind of still the mentality.
Yeah.
I mean, we're not Silicon Valley, where like everybody joins in a couple of 2 years. I think Silicon Valley did the norm is to join companies every 2 or 3 years, right?
Yeah, 2 or 3 years is pretty normal, yeah.
I mean, back in, I think 2008, 2009, if you join Amazon, you're basically just staying there for like 15, 20 years. If you join Microsoft, you're going to stay even longer, right?
Yeah, 25 years.
You generally enjoy the Microsoft life, right? Like you get not free lunches, but like you have good benefits, you feel proud of your work, your parents know where you work. It's like the good vibes, right?
Yeah.
And even people internally feel like they're the king of the, industry. Like we're Microsoft, we do everything the best, right? And so it feels odd to me because I thought I was be there a long time, and you try to put all your hope into getting promoted or transferred, and none of those are options. And so I had to like figure out how to actually get good at programming because I want to do it, but also prove myself that the skills uh, and people want to give me interviews, and also I can prove myself to go through interviews. So it was stressful times. I remember just to like prepare for them, go through a bunch of interview processes, and figure out a way to like get through the phases. Looking back, of course, like it wasn't like a tremendous challenge, or definitely like a challenge. But I was really fortunate to go join a startup because going to a startup really changed my perception.
No, I mean, like, and I had this exact experience in Seattle coming out of a finance undergrad at UW and working at Boeing and getting my work done for the entire week in like literally an afternoon, like a couple hours. And I turned it all in, and the guy next to me, I've said this on this podcast probably 10 times, so sorry if you're a repeat listener, but he's like, hey, why don't you take a little bit more time on your work? I'm like, why? He goes,
yeah, write more tests, more design, more meetings, more whatever. Like,
yeah. He goes, well, just take your time. I'm like, is there anything wrong with my work? Or no, it's all very, 100% correct. But, we just kind of take our time around here. And it was just like a culture shock for me because I worked full time in college for 5 years. So I was always working like 40-hour weeks and taking, 3 or 4 classes for like 5 years.
Yeah.
And I never had any time to dilly dally. I just got my shit done and moved on.
I even got in trouble, by the way. I joined the first day or first week. My skip level asked me, "Hey, how do you like the team? What do you like? What do you like or don't like about the team?" I was,
"Oh, is that
like,
Microsoft?"
Nice, yeah, Microsoft.
Yeah.
But like, I feel like many people are not doing much. I literally told
you
my
kind of gave that feedback. Oh no.
Yeah, I literally told my skip log. I was like, I didn't know what that means. My manager was screaming at me, because I say, hey, so and so. My manager told me you told him that we're not doing much at all. Like, how dare you do that? And that ended up to be in my performance review at Microsoft. Exactly that is not.
You stuck. You stuck your head up and got pounded down.
I don't have the necessary social skills in the workplace, something like that.
Well, you were 22.
This is how politics work in companies, right?
Right.
Like if you're in the path of somebody not potentially getting the promotion because he's trying to get his promotion, right?
Right.
If I am potentially, then I'm gonna be ranked.
Well, yeah, like you're kind of like trying to make all your bosses look good, so they all get promoted and you get promoted, and they bring you along.
Yeah, and I was like thinking from like I just want to learn how to be a good engineer, like be able to work on cool stuff, and like that was all I can care about. And the careers in big companies is so much more about people helping people.
I think I did it the right way. I did it kind of backwards. I started in startups, iterated my way into big tech in my late 30s when I had 3 kids, post MBA, and I was kind of ready to kind of coast for a while. And it wasn't coasting. I was working hard, especially at Amazon. But in hindsight, it would have sucked to start my career in big tech. But maybe that was a blessing for you.
Yeah, I think in the day, wherever you start, it's not going to be where you end up with. And I told my friends all the time. And like being stuck in IT doing almost like the boringest thing actually is helpful. Like even investor now, because people never knew how does it feel like to work in IT. A lot of people are doing AI agents for IT now, or like think they know how IT works and how all these great engineers from Stanford and whatever, like we're going to build a new AIT system. There's so many companies building AI product engineers, AI product managers, AI SOC, AI whatever. Because this is like the new ways of positioning your startup is no longer LLM for something. It's like AI a role here, right? And look at how many salaries are being spent here.
Yeah,
we can
it's kind of like this transition from software, like, hey, I'm going to build software so people can use it internally, to like, I'm actually going to build a worker for you that does stuff.
I think you probably built a beautiful technology here, but you probably won't be able to sell this at all because you don't understand the people, and you have to understand the people to be able to sell this kind of solution. And if you work in IT, you understand the nature of IT. What is the job to be done here? And you understand like how they think and how they operate, right? They're not the most risk-taking people ever. There's no rewards of taking risks. Your whole job is to make sure things just keeps the lights on. That's it.
Yeah.
And you introducing a brand new AI system that can do genius stuff is not the most safest thing ever You can imagine. Anyway, I have this debate almost every day with founders building AI agents now. Going back to your question, like all these little small experiences, I don't think it's really helpful for my career progression point of view. But it's looking back, these experiences help me because moving forward, I work with a bunch of startups, work in
Yeah.
different companies. This IT part of it, I often find it to be also a very interesting experience for me because I can identify myself quite a bit
Right.
when I'm looking at, and I still have friends working at these places, and because I'm like, you know what, the fundamental rule will never change. You can't just go and sell something you don't really have an understanding of the people, because selling is not about selling technology. It's selling to the people that can trust
Yeah.
you that are building this, right? You're fundamentally trusting the people behind it, especially when you're startups.
Yeah, you better get a co-founder that actually knows the space that you're selling into, because
And that also is very hard too. I
Yeah.
think finding co-founders is a very difficult thing.
3 things I want to unpack from what we just talked about, and we'll just take them one by one. One is what you're describing is the importance of founder market fit. Like how does that fit into your thesis as you make investments today, and how important is that, or do you take it on a case by case?
I don't want to repeat what every investor talks about because you're going to hear about this from everyone.
Yeah.
I think founder market fit, there's a way to look at this on paper, and there's a way to look at this from the people fundamentally. What can or cannot they do, right? And when you're looking at companies you're backing, let's say I'm building an AI agent for IT, right? That we talked about. Founder market fit ideally is finding people that worked in IT with a co-founder, probably, right? You have a co-founder that understands the people, understands how the value works, how understands the personal relationship and personal
and has a network,
personal motivation to want to even change the space because the companies are hard, right? Ideally with like some AI research background because AIs keep changing, so you need to be able to keep up and all that kind of stuff. And ideally with like a little sales background, right? Somebody can actually get enterprise deals done because selling these places are pretty large. This is your atypical textbook founder market fit type of teams that everybody's looking for. And you probably put them in your memos like, oh, wow, they has all the check boxes.
Yeah.
I love them. And then in reality, it doesn't really work that way, And you will look at all the successful companies. Like, did Shopify founder ever really open an e-commerce store before? Did a Spotify founders open up a music thing? Like, did all these people, did it really did all this? Like, not always. Like, there's no rule to it.
A Facebook, it's a bunch of college students starting this thing to find dates on campus, right? I mean, they're solving a problem that they have. So it's like a good founder market fit, right? But I think what we're kind of unpacking here is like how important is it in enterprise and open source and dev tools and IT?
I think technical founders needs to be able to learn a lot by themselves. And this is probably not controversial too much, but I think where it comes to like more controversial with other investors looking at the same companies, they'll say, hey, this team is too technical, too much engineers, right? Never done sales, never known on products. We're not going to back that. And I think, sure, that's probably the best way to look at it. But I am, on the flip side, more optimistic that I'm willing to back more technical people that can be able to learn. And I think the fundamental difference is how do you spot the companies of people that has more potential to be able to grow and learn? And I think a lot of VCs don't bother or don't really try to piece together, right? They're like, I can't understand. This is all keeps talking about like technical details, nothing else. We're like, it's just hard to pinpoint. And I think that's obviously, there's also a VC founder fit, I realized too. A VC founder market fit,
That was going to be the next thing I wanted to talk about is
because
the investor market fit.
Founder market fit is always very hard to evaluate because we're all we're doing is trying to predict, is this company going to make us the huge return we're looking for, right? This is all this exercise is about. Is the market big enough? Is whatever. But you back a company, they might pivot to 180. God knows whatever we're actually backing. What is a perfect VC founder that has a founder market fit? Actually, I realized it's actually all interrelated. The VC actually has to believe the founder can grow and learn and to be in that market, and have the unique investment thesis, believing that this team has what either is a unique insight because they're outsider, or they have the unique ability to go through all these challenges. And I don't know if there's a right answer to it. I think I just personally, because I back more open source related or enterprise related or like developer or technical audience based related products, And then, knowing Databricks early, knowing Confluent early, knowing Docker early, knowing all these companies early, the one single trait is most of these people have no idea what commercially they're doing at all. You ask them, zero idea. They'll just stare at you like a blank face. And this is not your favorite
What's your
thing.
go-to-market strategy?
It's not that. I asked them, like, how are you going to make money? We don't ask that question here. Like, it's just like a blank stare, and how do you underwrite that as an investor? If you're backing the space, well, they can't even tell you like a damn thing. They didn't even try. And you feel like whatever they're trying is even making
they might say something like, oh yeah, we're gonna get the buy-in from the open source dev community or IT community, and then we're going to have a hosted enterprise version at some point.
That's what's known today.
Yeah.
That wasn't a known fact back in 2012 or 2011.
Right.
The Confluent founder was my manager at LinkedIn. Actually.
Oh wow.
Yeah. So.
Well, you're at LinkedIn as well?
Yeah.
Oh,
just a couple months though. I didn't even put on my LinkedIn at all because I was not there very long. But I was on a Kafka team. Yeah.
Oh, okay.
So that was my little exercise here. So anyway, I'm looking for founders in my space particularly. I'm really looking for people that can get the first thing right, which typically in most infra companies is not like they know all the commercial. They're looking for all the things. They maybe have like a hint. Maybe they have somewhat a rough idea. But to break through in this infra space, fundamentally, you need to have a very unique stance of something. You're challenging some fundamental assumption about some existing. If you're right, it could be big. But it's very hard to get right. Right.
Like it's a new way of warehousing data. It's a new way of setting up infrastructure. It's a new way of running search.
Virtual machine was the only way people know how to do things.
Right.
I mean, container always existed, but it wasn't a thing people were considering to use at all. Like it wasn't even in consideration. It was only for these weird companies that has weird skill sets. Maybe they'll consider using this real bizarre thing, But for the 99% of people, we're just going to use VM because it's the only tool that seems the easiest and available. And so it's not obvious container will be a thing back in 2013 or whatever. Docker didn't invent anything, but Docker made this barrier to entry way lower than anybody can imagine. And I don't think anybody prior to that, like Solaris Zones or LXCs, all these other prior technology was not meant to lower the barrier to entry. It was targeted to people that already are familiar with this set of stuff and gives you way more option than knobs, right? And Docker, what it did was like, there's no knobs when you run the first time, right? And that alone was pretty crazy. And I think there's like a fundamental shift usually when it happens. Like, wow, this could change everything. But that is what I'm looking for early days for founders is do you have something that can change the industry, but you also have the ability to also address fundamental assumptions about the current space? And can you also create something that everybody else has a wow moment without even knowing or trying? Because some things are just too hard. You're like, I'm the only person that can do formal verification, for example, and everybody should do that. Like, sure, I think everybody should do that. But if it's just like containers back in the day, which requires months of training to even start one, forget about it. But most technical people tend not to lower the barrier to entry at all, tend not to do it to a point. Anyway, so founder market fit for me is finding the right persona, that somebody's very ingrained into a technology and really likes to change the current assumptions, but also cares about the people that's outside of the current users. And we're always interested finding people that are pretty obsessed with something that nobody else is obsessed with. Those are the most fun founders to work with.
That's interesting. Well, how else are you evaluating these open source startups for investment? I mean, one of the things I see on these slides that are pitching is GitHub stars or forks or, stuff like that. Like, what else are you kind of looking at metrics? Because they don't usually typically have revenue, right?
Yeah. And so
not initially, not for that first couple of years.
Realistically speaking, you had to look at open source companies in a couple of stages, right? One is okay, it's really fast growing. Like when we back Tabular for Iceberg, when we back DuckDB, Mother Duck, right? These are projects already growing. So you're looking at this, you're kind of looking at a few things. One, where does this project even can lead to? that has any potential for anything that's marketable that you can sell. What's exciting about these things, right? Because these open source, you can never sell open source. It's already free. And you add more code to open source, it just makes more things free. So you're not really able to like monetize anything out of these things. So you really have to believe, can this thing in front of you change the behaviors or the buying options? So one day when you sell something else, people will choose something instead. And so that's kind of my think about the world, right? Is it doesn't matter how much GitHub stars you are. If what you're fundamentally selling isn't going to change or increase people's budget, it doesn't matter. You know, you can just keep doing GitHub stars and you would just keep trying. Because you can be a nice project but no business, basically. And of course, it's not going to be obvious. You have to take pretty big bets about what that could happen. But it has to at least have a story, right? It cannot be nothing. Like, we hope everything that grows GitHub stars over 100K will be great companies. Like, you do need to believe that whatever you put out for free, you know, has enough potential to change either in your brand, your funnel, or the fundamental way how people are doing things.
I want to tease out this point, which I think is a really good point, which is you have to tease out, like, is there a business here? And meaning, are you going to change or augment their budget? Are you going to create a budget? Are they spending money to solve this problem right now? And this open source tool makes it free for them. Do they have this, like, I don't know, like the toothbrush test? Like, are they going to have to use this every day? And will they pay to have it, like, you know, have 5 nines of stability? And, you know, is there a budget here?
And maybe to like be more concrete, like we look at a company called MotherDuck, right? You know, DuckDB is sort of an alternative to your Redshift and your Snowflakes of the world, right? Even though I don't think they market it that way. But when you look at it, sure, it's a data warehouse, but it runs on your machine, right? So we're making fundamental assumptions that something that runs on your single machine is powerful enough that you can actually run a lot of data, right? And that's why MotherDuck wants to run a small data conference, is to fight the assumptions that you need a big warehouse spending so much more money to manage all your compute, because that's the only way of doing things. But can we? Can we do scale ups now? That also has a scale out story, by the way, right? You can't just forever single machine. But your single machine is so much more flexible and so much more powerful than you think, that you're fighting the fundamental assumption that all your data has to exist in a single vendor closed ecosystem, right? Even with Databricks, you still need to put into Databricks places. Where DuckDB kind of changes and chip away the market. We're like, hey, data incident in your data lake, you don't always need to spin up compute in Databricks. You can actually spin up a 10x cheaper compute on DuckDB, right? And MotherDuck, because it works so well in DuckDB, I'm the best solution to help you manage and collaborate and governance this side of the world. That's kind of like looking at this opportunity here, right? DuckDB is free. You know, so you can't go and sell DuckDB, right? And if DuckDB solves all your needs, there's no company that should exist here at all. Which is actually, it is the biggest question for everybody else looking at a company. It's like, what can you sell? But anyway, you know, there's a lot of ifs that needs to happen here. But at least what all it points to is, can we change what people do today? If they're always going to go for Snowflake, if they're always going to go for Databricks for all their needs, there's no business. So we had to fundamentally believe that a new form factor would change how people want to do data. And it starts with small data, right? It starts with the fact that you have this ability to now run so much data on your own in your machines. And it reduces so much more complexity here, potentially. When you look at a company, you have to cover the technology. And the fun part doing this infrastructure space is that the people building the technology, they cannot tell you what the product they're selling is going to be. It will be a blank stare. It'll be some bizarre statements. I was like, okay, I just don't even know how to ask you that question anymore. So I pretty much sometimes even stop asking the question. I'll basically work with them, get to know them a bit more, know how they work, what they like, what they don't like, some of the fundamental stuff. And then I had to sit down myself. I was like, what would this lead to? You know? I had to make a bet on my own. Hey, this could lead to something much more different in this industry. And I think this had a shot, right? And use that as a way to believe this company has something worth betting on. Because otherwise, if you wait for this PhD to tell you something like concretely, like it's not going to happen.
So this is something I think about a lot as an investor is, you know, I mean, it's the core question, really. How do I know this will be $1 billion company or not? And how
Yeah.
can I tell if I go back and back test stuff from 10 years ago, 5 years ago?
Yeah.
And really all you have is like, okay, you got the deck, maybe what the founder told you in the call. So your call notes, which I'm recording all my calls now because of that. And then you have a time machine and you find their old LinkedIn profile. And then, okay, that's kind of what you have. And then now you're kind of looking at all this and you're trying to, to put my data science hat on, my informatics hat on, what are the features that are predictive here that have predictive quality? And there's some VC shops that, and I've had some on this podcast that's how they make decisions basically.
Mhm. Yeah.
They extract the features and they, come up with some algorithm that says, okay, this has a high predictive score.
Yeah.
What do you think of that approach versus kind of the art and science of it?
At this point, I'm still a baby VC, only 6 years in, but I learned enough to this point that I don't think I can have any critical comments about any other's methodology. Because VC fundamentally it's also to some degree almost impossible to teach. We all have certain things we have to learn how to get right. But what used to work 20, 30 years ago doesn't work today anymore.
I love that point, which is, if you're using data from 10 or 15 years ago to make decisions in the present day, everything's different. The platforms are different, the people are different, technologies, everything.
And even like LPs are making that all the time with data 30 years ago, telling me like, Tim, you should run this fund this way. Like that's 20 years ago. But there's only data for VCs performance also 10, 20 years to look at actual results, DPIs, right? So if you look at DPI only, like we have to be looking a certain way. And I think similar for founders and people making evaluation, you either evaluate it as a stock picking thing with like take your financial statements and like quarterly reports from your public companies and translate down to private ones, and you're trying to do the exact same thing. A lot of SaaS companies is about that kind of funnel efficiency and
and you're talking about like growth stage, late stage. You can kind of almost approach it like an analyst,
or even like some other SaaS type companies where like it's more of a cookie cutter, going to industry and play a certain game.
Right.
So I think every investor is fundamentally are good at backing certain things, and it doesn't necessarily be industry specific or vertical specific. It's probably just like characteristics about what the technology and company is about. And it's also very hard to teach. And so I realized every investor will fundamentally make different bets. Of course, we all be like FOMOing, we tend to go after certain things.
Yeah.
But that's all based on pattern matching, right? Once the pattern matching breaks or doesn't break, right? I don't think fundamentally most investors are good, that our longevity in this space tend to be a bit more independent thinkers. And they have their own personal intuition and level of understanding for certain kind of companies. They know what they're good at. They know what they're not good at.
Right.
But when it comes into this space, it's not like a place you can go practice investing. Unfortunately,
there's a phrase in VC. It takes 10 million to make a VC, like to train a VC. The longer I'm in this game, the more I believe that, because I'm also 6, 7 years in like you, and I look at some of the stuff I did years ago. I'm like, oof, shouldn't have done that. And you learn a lot. You take your lumps and you're like, oof, shouldn't have done that.
Yeah.
Oh, that wasn't differentiated,
To answer your question, like, what do you think about somebody else's just pure numbers? I think that's genius too, because it probably worked for them for certain kind of companies, right? And I have investors tell me, because I'm looking from the product lens, like, why does this has any interesting thing as a developer tool or whatever? But he told me like, Tim, number doesn't lie. I would just look at numbers. It's good as anything else. I'll back it. And time will tell which one are we right? Maybe I'm just too foolish, right? Maybe I'm just using too much as my own biases.
Yeah.
But, I think end of the day, our job is to find the best ones every fund, however we can. If it works for them, that's great. I can't copy that guy or girl. Unfortunately,
we're all unique. Just like every startup's unique and every portfolio is unique.
I have to find my own living, right? To keep doing this, and I have to fundamentally figure out what works for me and doesn't work for me. And there's just no textbook. We can only learn some failures, which I think is where the funny part is. And I think we can also learn other people's failures. which I think is also very good learnings. Also, we can look at other growth stages companies, what work
Mm.
doesn't work, have some intuition, but you have to spend so much time and learnings on each sector to make really good judgments, I think.
Yeah.
So I
So
think most
that,
people underestimate the amount of work requires to go study a space, because you can't just study a couple companies. You have to look at the growth stages, look at the IPOs, look at people that die, look at people, all of those combinations, and also the buyers, look at the budgets. In all combinations, these are things that actually works in the past, but what has anything changed? To come up with a really good thesis requires all these data points synthesized in one place, and like there's no way you can do that in a week. Like it just
no, takes
requires you to
years.
actually study
Yeah.
quite long. But obviously, every investor can back 30, 40 companies, and we're just kind of YOLOing every one of them. Maybe get lucky, right? And I don't actually preclude that as a bad strategy either. Maybe your friend group, your deal flow has such a unique quality
Yeah.
to it. You
Right.
just need to spread the love, And I actually think that is genius too, because that works for you particularly. It
Right.
may not work for me because I don't get the same deal flow.
Right.
I don't make the same judgments, right? I don't do all that stuff the same. So I can't use that methodology to invest.
That's interesting. Yeah, everybody has their own methodology, and I want to tease out one of the points you made, which I thought was really interesting. This question of investor market fit, right? You said it's not really about investor market fit, but it's really about investor characteristic fit.
Mhm.
Each investor has a unique way, a unique algorithm in their head of making a decision, the intuition of making that decision.
Yeah.
And you can use numbers and math and science, but fundamentally it comes down to a qualitative assessment of the things that you care about based on all the pattern recognition that you've duly earned over years and years of successes, but also mostly failures.
So, things are still too early to tell. But what I've been able to figure out now, or what I feel like I'm getting better at, I used to, I don't know, everyone is more naturally risk taking or not more naturally risk averse. I feel like I'm probably more risk averse, even though I like startups and all these things. I'm much more risk taking than my regular Microsoft friends. But in terms of some other people that buy 100% of Bitcoin, right? Okay, those are much more risk taking people. I'm probably much more risk averse compared to them. Been learning to lean more on my intuition more than before. Where I feel like I have been second guessing myself a lot more back in the day. I probably have a lot more intuition that I lean into, because I feel like the ones that worked out the best tend to be the one I have the strongest belief and the strongest intuition for. And
What year in investment count do you think that was for you, where you're kind of like, you know what, I've been second guessing myself and I'm going to lean a little bit more towards my intuition? What year
I
was
don't know,
that, and
because
how
it's
many?
it's not like I crossed that point. It's like
Right.
a little
Gradation.
pendulum that finally starts to.
Yeah.
And you know what? This is it's you can't do that for every single company too, because I can only do that for certain kind of companies that I've seen enough, looked enough, I've done enough. But today when I'm looking at, because I'm much more infra, sometimes I do back a few vertical apps from time to time.
Yeah. And I'm the opposite. I'm mostly vertical apps, but I do
and
infra
so
from time to time. Yeah.
when I look at insurance tech focused one versus a credit versus one versus doing LATAM, some people are doing EMEA. These are big factors to consider, and they all have very particular dynamics and particular paths it might end up with. And I won't have any good intuition there, like at all, right? So I need to build that, and you only build that through
actually making investments or missing them, passing on them, and realizing, oh crap.
It's all about studying. I realized you can make an investment or not. Making investment is probably the easiest way to actually learn, but at the same time, it's on the cost of somebody else's capital. Right? So sometimes I will do angel investments on things I'm completely unfamiliar with. I don't want to waste other people's money on. I can waste my own, right? But on the flip side, is doing podcasts like this, like you're talking to founders on a repeated basis, but hopefully targeted to a more particular type of companies. So you start to build some intuition around certain type of characteristics. So when we look at the 40th one, like, okay, I understand enough. I've done enough homework. I can see where what are the biggest questions I really need to get comfortable with, and what are the biggest things I have to prove out with, and what are the ways I can tell this company has a shot versus not.
Yeah.
So it depends on what kind of company. It probably is the right answer.
Yeah.
Like, I don't think I have the same intuition. I cannot trust my intuition on everything. I can only trust on the things I looked at so many times. My open source startup podcast is really helpful as well. We're just looking at this company is almost like and thousands of bases at this point. So it helps me able to get a little bit more intuitive.
It's a big part. The reason I do the podcast too is to help my founders, but also get to know them more, especially the ones that are successful. They go on and raise a Series A or B. And I haven't had them on the podcast yet. I'm like, okay, I better have them on the podcast and like learn what I got right and what I got wrong. And then I'll even have founders on the podcast that failed, right? Let's do a postmortem. Let's talk about what we got wrong in this, and I've had a few brave founders that have come on that.
Well, that's the fun ones. Yeah, I really enjoy those because that's the ones that you probably learn way more than the failures than the ones that work out.
Yeah.
Because it's really hard to replicate the ones to work out again. It's like, oh, that worked out. I can go back another one. But the failures tend to be the same failures across the board.
Yeah.
So getting to know the failures is very important because you don't just blindly just backing something, because one, you might get lucky, right? But second of all, that doesn't improve your chances the next time. We don't get better at investors blindly backing things on paper. The top quartile is just fundamentally hard.
Yeah.
Investors are smart on average. You think everybody else is done on 50% percentile? I don't think so.
Well, yeah, I love to tell my LPs this. The average for seed is 25 to 35%, depending on the vintage, the IRR. But the standard deviation is also 25 to 35%. So like you could have some funds that barely return capital and some funds that just knock it out of the park. Yeah. And there's a very high standard deviation. How do you think about that as you construct your portfolio and how many investments do you make and stuff like that?
Yeah, and that has to be learned over time for me because I had no idea how to even think about like portfolio construction. Like, Tim, we're backing 15 companies, earning 20% each. Like, holy, no, we're doing 80 to 120 companies because all it matters is getting to the winners, right? And I think it's just, I get comfortable a little bit more over time just through actually seeing the kind of companies we're able to get into, the kind of outcomes we're able to get so far. And so now I learned, right? And I think any investor that's small fund, right? If we want to be able to get enough ownership, we have to back pre-seed rounds, right? Yeah. We're not going to go after like large seeds. But like if you're going to back a lot more pre-seed rounds, you have to price in the risk. That's
failure. It's a higher failure rate. Yeah.
Yeah, you're going to die a lot more, and it has to be okay. And you also need to learn how to play the ball game differently with the different failures. So
right.
I don't know. I realized, so to price it in, for example, means I'm trying to back almost 30 to 35, not even counting non-core checks, which probably gets to like the 40 to 45 companies per fund.
Wow.
That's my fund model, where we're trying to own enough for ownership, but not like crazy. We're not like a seed fund leading 10 to 15% or whatever, but but we need to also have enough shots on goals because I want to take more risk. I want to back on people that still have the ideas not fully fresh yet and learn how to make better judgment and bets in this space. Because we have some good successes, but obviously we can always make sure our success rate can go a little bit higher if we can, or get better at certain things. Now it's like, okay, pre-seeds we're focused on. Let's make sure we have, not too wide bets because then you don't really know what you're backing anymore. Just enough concentration where like the bets itself, if it works out, it can return quite nicely because of small fund nature. But if we have 2x more depth than other startups, other funds, it's baked in. Yeah.
Yeah. So, and we're similar. We're probably on that, over 100 per fund model. Maybe that'll change by the time I get to fund 5. But I think if anything, I'll probably step up the amount because there's something like $200 billion companies, created every year on average.
Yeah.
Some companies that get pre-Series A funding every year. So 2%, that's the rough unicorn hit rate. And so the way I think about it is like, well, I should probably be investing in 200 startups that I think have the highest chances of being $1 billion company every year. I don't have the team or the fund size to do that yet at Team Ignite, but someday I'll have 500 or 600 startups per fund and it'll be absolutely bonkers.
I mean, that's the way of doing things, right? And there's nothing wrong to it too, right?
It's just a way, like there's no wrong way to do venture, but there's plenty of wrong ways, right?
But the LPs have their own definition what good funds look like, which I think they're not wrong either. Because we look at the hard data, what is the most likely kind of fund that can work out? They also run statistics too.
Well, they're also, LPs have this advantage because they can look at each fund manager and kind of fit them in a box, right? So, he's my infra dev guy and he does 30 per fund and he's in the pre-seed and seed. We're Team Ignites are a little harder because we're
Yeah,
kind of a
you know,
generalist. We do
yeah,
B2B SaaS, fintech, AI marketplaces, and
yeah.
we don't do hardware, biotech, or deep tech as much. And so, like, I talk to LPs that are larger checks, and they just really have trouble fitting me into a box.
Yeah.
It
Yeah.
makes it a little harder to raise, but I think it will result in good returns based on my background, my unique perceptions and intuition, and how I approach investing and how Team Ignite approaches everything. It's not necessarily the best way. It's just the best way for us.
And before we actually show DPI, we're all improving, we're all emerging, we're all some kind of raw fish that we don't ever seen before. So, I think it's just the nature of the business, right? The early days of every VC fund, like being a founder is so much more stressful. Like, even though I'm working this similar type of hours, but fundamentally, it's so much more stressful being a founder than being a fund manager. Because you don't have runway issues before as a fund, right? I'm not running out of money. I may not even raise my fund. So I have to go find a job. But if you can be able to raise your fund, at least that fund, what's going to pay out for you or not, right? You have you prepared mental model is already there. We're like,
you have 10 years of tenure is how I describe it.
Startup,
Yeah.
You raise a pool of money,
Yeah.
and it's not long, just a year and a half, 2 years. And nobody's going to give you money when you have 2 years complete gone. And like, I'm zero. I'm like, is there a bank account? Let me go raise some more. That's not happening, right? You have to raise like 6 months, 9 months beforehand. So realistically, you have like a year.
Yeah.
And everything has happened in a year. It doesn't happen accordingly with some high flying momentum. Like, how I keep my employees, right? How do I keep, like, it's the stress level on a timeline is so different. But
it is as stressful, but it's a low burning stress.
I think it's long-term stressful because
long-term it is.
It's a long-term stress because I think short-term too, because raising funds is hard. So harder depending on who you are. So of course that's a little bit of that. But if you can overcome that, then really, really boils down to it's like in 7 to 10 years time, we're all going to be judged on one number alone, right? And that number doesn't matter how nice things look. If that number doesn't look as in the ballpark of okay, right?
Yeah.
Or good enough, but we're
at least 3x gross over 10 years is kind of the minimal bar.
DPI is very deceiving, as you know, right? So DPI is what truly people are really looking for. So,
right. Yeah, just for the audience, that's total value paid in capital. And then DPI is distributions to paid in capital. So that's actual cash return.
That's what we actually that's why people are selling all kind of secondary just to make sure no numbers, because you want to keep raising their funds. And when you start early, we can all use our paper value, but that doesn't work
after about fund 3 or 4.
There's a certain time, like, okay, you told me paper value, it's still paper value.
It's still paper. Yeah, you came back.
No more of that. Like, I need a CDPI to even make more bets on you.
Anyway. Well, I know we could talk for another hour or two. I really enjoyed the conversation. Where can folks find you online?
Oh yeah, essence.vc is our website. TNACHN is my Twitter handle, or Essence Venture, our Twitter handle. That's
the podcast too.
Open source startup podcast, and I run also yet another infra deep dive on infra technologies.
Well, we'll have to have you back on again. I really enjoyed it, and I'm sure the audience will get a ton of value from it. Yeah. Thanks so much for coming on.
Of course, sir.